right, good morning, good afternoon, good evening, everybody. This is Will Bridges from 123Trade. We're back from, well, I've been on a couple weeks of vacation, so I hope you guys are excited. There is a lot to cover in today's session. We've got the debt ceiling in the U.S. rapidly approaching. October 1st, we are scheduled to hit that debt ceiling, and what that means is that, well, they're more than likely going to have to increase the money supply here in the U.S. by a lot. If they raise the debt ceiling, it's going to have to be by trillions of dollars to be able to support the infrastructure bills that they're trying to push. Because, well, let's just say we're at, well, we'll get there in a second. I'll show you guys a little bit more about what's going on, a little bit more details, so you can know what I mean and you can understand why we're going to look at some of the trades and opportunities that exist in the world right now. But how we doing, Phil? How we doing, David, Dava, Trevor? How's everybody doing? Hope you guys had a good last couple of weeks. I know that the world continues to spin and get a little bit crazier, and spin is probably a valid word for that. But let's go ahead and get this show on the road. Let me make sure we're recording, so we are good with that. So you guys are looking at the right screen. Let me double check. Looks like yes. Perfect. So let's go ahead and get things moving. First things first, got to cover the risk disclaimer. What this says is that if you put your money in the Forex, or any market for that matter, your capital is at risk. You guys have heard me say this before, you got to risk it to get the biscuit, folks. No such thing as a guaranteed trade or a guaranteed investment. The only thing that you can control is your risk. So I'm excited to be back, excited to go through and show you guys a lot of cool stuff here today. There's a lot going on. And David, I certainly understand the cabin fever down there. They've been calling you guys Sydney cats down there. I don't know what that's about. But anyways, so I will just say I don't live in Australia. I only get to see the internet filtered information that is available these days. But if you guys do have questions about anything that I show in this presentation, I'm going to do lots of technical analysis. I'm going to have lots of trade ideas in here. I'm going to talk about a lot of economics in here as well, because let's just say that's what I like to do, and that's what has been profitable for me in the past. So I want to try to impart as much knowledge as I can in here, help you guys understand what's going on, how to pick currency pairs. You know, is a big thing that a lot of people don't know enough about. But if you do have a question, stop me. There are probably 20 other people in this room with the same question, and I'm here to make sure that you guys really understand how to approach this stuff and really figure out where the money is likely to go. Because I'm not here to talk about politics. As much as everybody in here probably cares about politics, I certainly am not here to disagree with your view on politics. My job is to figure out where the money is going to go. So that's really what I want to do. So that being said, if you have questions, stop me. This is your first time in one of these sessions, and it very well might be. This is what 123Trade does. Some of you might be watching this recording on YouTube once we post this later in the day. But we assist in getting regulated secure brokerage. So if you're looking for a Forex broker, we can absolutely help you do that. Send us an email to brokers@123trade.com if you need help, if you want to add a new account or you have a family member or whatever. And we can absolutely help you get the best trading conditions we can find in whatever country you're in. But we're also going to look to provide a lot of guidance and mentorship. We want to make sure you guys understand how to manage risk, at least the way that I've been taught. I'm going to show you a lot of things I've learned from a lot of traders around the world. Personally, I've been fortunate to work with a ton of, well, very experienced traders with 10, 20, 30 years of trading experience for the last 7 years. So I've been very lucky to do that. I've worked with a lot of traders that have been, let's just say, completely unexperienced as well. A lot of people middle of the road, thousands of people. So I'm gonna share as much as I can with you guys here today. I'll try to keep it manageable, but I want to show you really just how to get going with all this trading stuff. And we used to show all these other videos in here every day. These other topics in here every day. There are actually videos available for this on 123trade.com. I'll just pull this up and show this real quick. People that don't know this exists. This getting started trading is maybe the first place that I might go. There's actually a pop-up here for the Chris Pulver report. If you guys don't know who Chris Pulver is, then this is a free newsletter. My opinion, probably one of the greatest traders in the world. I know this. Well, let's just say he wins Instructor of the Year at MTI pretty much every year. I can't remember who won it last. Okay, so if you want to get his newsletter, it's right there. Otherwise, on this YouTube page, any videos that we post, for example, maybe this session, not maybe, this session will be up here probably sometime around 4 o'clock today. It will be on YouTube sooner than that. So if you go to the YouTube channel and you subscribe here, you get notifications. You're going to get recordings sooner than you would otherwise. But, you know, there's some getting started education type of stuff here. If you want to know how to figure out what lot size to put into a trade, it's right here on this video. And that's really what I do to figure it out. I've also got a calculator I may pull up and show you guys during the session here today. But we've got lots of resources on the website you guys are likely going to want to check out. And otherwise, let's go ahead and pull up the economic calendar here. And then I'll get into show you guys the debt clock here, because I want you guys to understand what I think the biggest market mover in an incredibly long time. Can't remember the last time that they actually raised the debt ceiling. But we'll get to that here in a second. So let's get down to, let's pull up the whole week. And I'm going to go through the economic calendar. What I want to do is help you guys understand which economies are doing well and which are not. That's really it. Okay, so if we go through and we look at this here, RBA rate statement. This is the, Reserve Bank of Australia interest rate decision. They didn't change it. They said that they weren't going to change it. They followed through on your word. Yeah, I appreciate that, Maurice. I love doing these presentations, so yeah, by all means, Chris is the man. I love Chris. But let's keep on moving here. So Australia is not planning on changing their interest rate. They're actually the reason why New Zealand is not going to be able to raise their interest rate either. So they should have very consolidative, type of activity, I think, on the Aussie New Zealand, which is going to be kind of odd for a while. So probably stay away from that specific pair. If you come down here and we look at this speech that happened, we can see what Saunders actually said. Yeah, the level of GDP now probably fairly close to pre-pandemic is what he's saying. That's not surprising because they ramped up government spending and they're filling the gap. So really doesn't matter when it comes to the value of money because people don't understand how that works. So that's actually, good news for the pound. The zoo economic sentiment here, this means that people are not excited about the economy and, well, less than even predicted. Okay, so Germany, all these places in Europe, okay, if we talk about that, they're bringing on the vaccine mandates. Some people are happy, some people are not. Some people can't go to restaurants and buy things anymore, and some people can. So that's going to be a big hit to the economy, whether anybody wants it to be that way or not. So that is negative news for the euro. So keep that in mind here as we keep moving here. I'll do a little recap once we get done going through all this stuff. But Bank of Canada rate statement. I don't think they changed it. I don't think they can. Maintains policy rate. Continues forward guidance and current pace of quantitative easing. So they didn't change anything. They're still printing to the ceiling, probably more than anybody else on Earth. And, they've been, let's just say they've been increasing their debt to GDP more than any other country in the world since the year 2019. Okay, so I'm looking for weakness on the CAD as well. The only thing that we've talked about so far that basically is showing strength is the pound. And this monetary policy report hearings, we can see what they said. I believe minimum conditions for a rate increase have been met, but that they are insufficient to warrant one. Okay, so basically they're saying they should be raising rates, but they're not ready to do it. The reason why they're not ready to do it is because, well, let's just say, no one else on Earth is. So, still bullish for the GBP. Not quite as bullish as it would be if they actually raised the rate, but there is more of a chance that they raise it than anybody else from anything we've seen here so far. So that's really what I care the most about when it comes to currency, because that's what banks care about, interest rates. Okay, so this 10-year bond auction, okay, what this basically means is that bond yields are down lower than they have been in quite some time. You guys can see that. They're falling, okay? It's taking more bids to get a lower yield. Okay, so that is not good. That means that there is weakness in the bond market here in the US. And well, let's just say if they taper off and they stop buying their own bonds, which is what they said they were going to be doing and really the next month or so, then they would probably crash the economy. So they're probably not going to do that unless they want to crash the economy, because that's really kind of what they're saying would happen if they did that. But regardless, let's keep on moving here. Okay, so if we come down and we look at the main refinancing rate in Europe, didn't change it, not a surprise. They're not going to change that for a while. If anything, they've already said that they can go negative. Okay, so they're not necessarily, maintaining the hawk attitude that some people would want from them, but they're also shutting down the country, so it's not a big surprise. Okay, unemployment claims, these are down. Okay, more than likely that's because people aren't eligible for unemployment anymore because they've been on it for so long. Okay, so this is actually good news. Okay, that is better than anticipated, this 343, and it is less than it has been. This has been tapering down. If you guys can see these unemployment claims here, go back to last summer, looking at really obnoxiously high numbers. Those are gone. Okay, so we are getting back closer towards normal employment levels here, if you want to call it normal. But the Bank of Canada Governor Macklem speaks. Might as well see what he said real quick. This was a... let's just open this article, see what we got. And let's see, let's come down here and check these out. The recovery is progressing but choppy. Bond purchases have helped the recovery. Work will continue after QE ends. So basically they're going to keep expanding their balance sheet is what that means. They're not really changing anything. Okay, they're going to keep spending until, you know, daddy takes the T-bird away in Canada. So I'm going to keep being bearish on the CAD. Okay, oil inventories went down slightly. That is slightly bullish for the CAD, so it's a little bit of a mixed signal here, but really kind of flat. This 30-year bond auction, also declining value, so more bearish activity on the dollar. ECB President Lagarde, you know, she used to work at the IMF, and, you know, I think she's more of a politician than an economist. No related stories. That was this morning. Hard to say what she might have said, but we've already got a pretty good idea of what's going on with Europe. Canada, employment numbers, these look great, okay? Unemployment rates coming down, so that's actually a good sign. Canada's been a very mixed bag so far. We might actually be more bullish on that than a lot of things we've looked at. But other than that, this PPI, month over month, okay? This 0.7% is very high, okay? That's really a lot of inflation. That is not a good number because it's green. You know, historically, this is what PPI numbers have looked at. If you guys can see this big plump, this histogram over here on the right, if we zoom in, okay, these numbers are all much higher than pretty much anything prior to this year. You know, if you look at, this is January where I'm staring at this right now, and really the rest of the since then, I mean, this is it. Looks pretty high. Okay, that's historically high. If you come back here, you don't see numbers like this until you get back all the way to, you know, 2011. 10 years ago. Okay, so disgusting numbers for the US dollar. They need to raise the interest rate, but they can't. And the reason why I'm about to show you. Okay, so here's the reason why they can't. We go to usdebtclock.org. I'm going to show you guys this real quick. Okay, and basically you can see this just ticking up, you know, $1 million every, you know, 10 seconds, $100,000 a second. I don't know what the exact speed is, but you guys can see this up here, U.S. national debt. 28,743,712,000,000. Okay, so lots and lots of digits there to talk about. So if the credit limit for the U.S. government is 30 trillion, we are on schedule to hit that on October 1st. Okay, so what that means is that they need to increase their credit limit so that they can afford all the things they have planned to buy. You know, for example, all the infrastructure bills that are coming out, that they're trying to spend another $5 trillion. We've only got 1.3 trillion available on the credit card. So you guys do the math. I mean, go ahead, type in the chat box. Let me know what you think. Do you guys think that they're going to raise the debt ceiling, or you think they're going to let us hit it? You can type in just a hit or raise. You guys think hit or raise? Because really either one of them can happen. If there's any government that we've ever had here in the United States that I think might let us hit the credit limit, it would be this one. But I also don't think that they want to do that yet. I don't think that they have a choice either. I agree with you guys. Either one of them, the fun part is, either one of them mean bad news for the dollar. Okay, so that being said, I'm going to be looking for opportunities to make money on that potential dip that's coming. Okay, and it's not necessarily, nothing in life is guaranteed. Okay, I'm going to go ahead and pull up my charts now. You know, I've already actually, we'll make sure we do a quick recap here on all of what we looked at. You know, the Australian dollar, you know, there's lots of risk there also. Actually, there's another thing I want to show you guys. This company is called Evergrande. Okay, and this is one of the biggest, I think this is a housing company. But basically, if you guys can see this, this company has $300 billion in debt. and they're worth 46 pennies per share. The economic outcome of hitting the debt ceiling would be a default, and I think would destroy the world economy. David, is what I think would happen if we hit the debt ceiling. So it's really kind of it's a nuclear bomb for the monetary system if they let us hit the debt ceiling. I don't think they're going to do it. I think that they're more than likely going to raise it another 3, 4, 5 times in the next couple of years to avoid doing that, and we'll see how that works out. More than likely, you know, a lot of things can happen, but there's going to be a lot of money to be made in this period of time. That's the thing that everybody needs to understand, is that the markets are going to move an absolute ton, and that's really just the way that it works. And Maurice, you're talking about more exports on a weaker dollar, but we don't really export a whole lot here. I mean, we're a very service-based economy, and we import, I don't know, a lot more than we import way more than we export here. So it's not good for us to have a weak dollar just because it makes everything more expensive. So right now they're trying to tell us that, you know, inflation's only bad if you eat pork and chicken and beef. All the other stuff is kind of progressing at a normal rate. Yeah, something like that, David. There was the Bretton Woods happened in, you know, 72. We got off the gold standard in 1972. You know, 60 years before that is when they instated the Federal Reserve Bank here in the U.S. We are now, you know, about 50 years removed from the Bretton Woods Agreement. So we're due for some sort of a reset. You know, people used to talk about Great Reset being a conspiracy theory. It's not, you know. I'll go ahead and pull up another page here in a second just to show you guys the Great Reset is an actual thing. So, you know, but what I was saying with this China Evergrande group, okay, this stock has been falling like a brick if you took it max. Okay, this is a housing crisis waiting to happen in China. So this is the only thing keeping us from, in my opinion, is that this is the only thing keeping us from switching to the yuan right now as a world currency instead of the dollar. Okay, that's probably an extreme viewpoint, but generally speaking, it's been a pretty extreme time. I'm not afraid to make a claim like that. So that being said, okay, I don't really think we're moving to the yuan anytime soon because China is looking at a potential crisis situation in the housing market, and it's not really at a good time for them. Okay, so that might actually be good for places like, you know, well, everywhere but the Pacific. Okay, so Australia, New Zealand, if this housing crash happens, are going to see a lot of issues with exporting to China. So this is something to pay attention to. There's going to be big opportunity here. So what I want to do is I want to figure out what is going to be the strongest. And I just kind of told you guys about a bunch of risk, okay, is really what we talked about there. We talked about risk. So I'm going to be very risk off right now. And what that means is that I'm going to look to short the dollar, which we're already in a few of these. I'll go ahead and pull a couple of these up just so you guys can see. I'll clear this out. Okay, we'll come to the all-time frame first so we can get on the same page. This is the dollar yen, and the yen is a very popular currency to buy when there's a lot of risk in the world, and for a lot of reasons. One of them being that they're the third largest economy on earth. They have incredibly low unemployment. They generally are pretty nimble with their monetary policy. They'll pretty much do whatever it takes to make things keep moving. Okay, so this is really what the long-term trend has been on the dollar yen. Okay, that's the outside. That's the 10-year boundaries. That's the we divorced and I don't want to talk to you for a decade line. Okay, so really, to me, it looks like we're kind of towards the top of this, you know, slightly falling wedge that, you know, is probably going to work its way down to this 90 range sometime in the next few years. Could do it a lot sooner. I think sooner is likely. Okay, because right now, like I said, we're at these somewhat high prices. Let's go ahead and get a couple closer lines here. Here's our more recent range, right there. Okay, this is where we've been really for the last few years. We zoom in here. I'll come down to my weekly chart. Just work my way down. Okay, and we're at kind of the top of this. And there's also a pattern that you guys should notice here. If I pull this up, and this is where the trend line was. We broke up above it a little bit, and then the market fell a lot. Okay, so from the high that it made above this line here, it went ahead and fell 960 pips, 967. Okay, so, and then it made this trend line. This became the new trend line. This was the new downtrend. It broke above. Okay, it made a high, and then it fell again. We'll go ahead and see how much it fell this time from the top here to the bottom. 900 or so pips, 910 pips. Okay, And I'm just looking for a pattern on this. I just want to see what happens, how they're playing the game with us. We broke above the trend line over here too. And then that fall in and of itself, we're talking about, I don't know, 1,000 pips. So 900 to 1,000 pips. Okay, and now we're going to go ahead and look at the current trend line. Okay, and this is where, you know, we've broken up above the trend line again, and it could take off to the ceiling. There's really no gospel. But if it does the same thing that it did, you know, the last few times, we can actually measure where that might come out. And I'll go ahead and just draw a little box here. Okay, here's one of those moves. They're all about the same. They're all 900 pips or whatever. So I'll just go ahead and copy this box. Go ahead and move this over here. Pull it from the high. And kind of guess where this thing might end up making a little bit of a turn. Fun part is that we're really, you know, kind of at the, we'd be testing these low prices that happened. And there's actually a couple of them down here. So maybe the market doesn't come a heck of a lot lower than that, but I don't need it to. I've already kind of decided that I'm looking for a sell opportunity. I'm already in a sell opportunity, matter of fact. So that being said, let's come down to the daily, take a closer look. Okay, and now we're going to go ahead. I don't necessarily need this box here. I'll move that in a second. But we're just going to keep this nice and simple. I'm going to draw some more lines on here. Here's a trend line break. Okay, so you guys can see that trend line break, very clear cut. Okay, and we've got lower lows that have formed on the right side of this trend line break. So I can go ahead and circle those. You guys have a better idea what I'm talking about. There's a lower low. Here's another one. Here's another one. Here's the high on the other side of the trend line. Here's a lower high on the opposite side. So what this tells me is that I should be looking for sells, because reality is that I think that this thing is going to keep making a range that follows something maybe like this, you know, type of deal. There's really no gospel of how this thing's going to work out, but this is likely how this thing could move. Okay, really hard to say. I just kind of drew those on there. That's all speculative. So there's no actual, you know, perfect science to doing that, but I might want to know what's going on short term. Okay, so let's get a fib on here from the top. We are still in range. This thing came up. We tested our 618 up here. That's where this big blue circle of, at our C point. Okay, so if you guys aren't familiar with ABCDs, just to give you a quick refresh on that, because I know some of you are pretty new. So this would be the A. Okay, and then there would be the B down here. And then this is our C. And then my D extension would be down here at this corresponding red line. Oop. That's not what I wanted. Hold on, sorry, I hit the control button by accident. But yes, our D extension would be at our corresponding red line below. Let's go ahead and get that down here. Shift D, not control. So maybe we go ahead and get a little breadcrumb for ourselves here. This might be the line where I decide I want to rip the tape on life and get out of the dollar yen for a little while I look for it to maybe, I don't know, make a little bit of a rebound upward so that I can look for another sell opportunity. Maybe I can run a robot on this. There's a lot of different things that you could do. But all of that said, let's go ahead and zoom in a little bit here. I'm going to need a stop loss on here. Get rid of that line for now. Let's come down to a lower time frame. Let's come to the 4 hour. Let's work our way down. I'm whittling this down. Okay, it's like just like I'm making a wooden toy right now. You know, I start with the big block of wood and I work my way down into the pattern that I want. Okay, so this thing's moving up really slow, very sideways type activity right now. So, well, let's just say I'm not super concerned about it making a big rise. You know, it very well could. The thing that I need to do is make sure that I manage my risk, because it doesn't matter really what I think or all the research that I did or what should happen. You know, the world has a tendency to just kind of do whatever it wants. And I think everybody pretty much is understanding that at this point. Because, well, let's just say everybody's kind of letting the government do its thing lately. But I'm going to be above this recent AB boundary that happened here. And from a standpoint of risk reward, okay, this is the most important part of any trade, is understanding your risk reward ratio. Okay, so that being noted, I need to measure this, okay, and I need to say, okay, we're looking at 73 pip risk, 75 pip risk for a 160 pip opportunity. So if I trade like this all the time, I keep the amounts, you know, close to equivalent, you know, I only have to win 3.5 times out of 10 to be profitable. So much less stressful than winning every single time. I like this type of trade. And, you know, the thing that people need to pay the most attention to, I'll pull this up here once. for everybody that hasn't seen this, and if you want this calculator, this would be calculator. Oh no, I think it might be lot size calculator. Hold on here. Equity management calculator. I was wrong. But I'll go ahead and pull this up. Like I said, if anybody wants this calculator, it's really simple. Just in a little Excel sheet, I put a couple of formulas in. And this is what I used when I started trading to figure out what lot size I should trade with. Because that's very important. It's really the most important thing. If you're trading with the wrong lot size, that could be the one thing that is keeping you from being a profitable trader. If you're having a really hard time trading your account right now, what I might suggest is to maybe try trading a 0.01 and see how well you do. What usually happens to people is they start winning trades and they get mad that they didn't trade bigger. But that's, you know, that's really the point, is that you trade an amount that's small enough that you don't have to worry about it. So for example, if you had a, you know, $1,000 account, we've got 75 pips at risk. Okay. For me to risk, and you can change this, we can get rid of some decimal places here and make this round for us if we want to. Okay, so if I want to risk 1% of my account, then I need to trade a micro lot position. That's what this would mean. That's basically what this means. If I want to risk 1% of my $1,000 account, I need to trade one micro lot. If I want to risk 2%, I can trade up to 0.03. So that means if I want to risk 2%, I could enter this trade twice. And I already have, so I'm not going to do it right now. But generally, that's what that means. So if you guys are struggling with how much money to put into each trade, you know, a lot of people just trade the same lot size on every single trade. I don't think that makes sense. And you can do it that way, don't get me wrong. If you have a very consistent strategy that you're always risking about the same amount of pips, then you can do it that way and simplify things for yourself. But that's usually a comfortability thing. I would say have some sort of a process like I just showed you there so you can figure out, okay, I'm going to do a 0.01 here and risk 1%, so then I don't have to worry about it. Okay, but all of those things being said, this is what I think on this dollar yen. I'm short already. I've got 2 entry points on it already. If you guys can see, actually I've got a couple in another account too. Actually, it looks like I'm in this one 3 times. So I'm already in on this one 3 times. So I'm going to leave it be. This CADJPY. This is another one I'm also already in. This one has been making a little bit of a rise. I'm kind of expecting, you know, we talked about a lot of things happening in Canada. They're talking about, like, I don't know, not really slowing down any of their debt purchasing, any of the stuff that they've been doing. We are looking at a situation where this thing may be looking to take a little bit of a bounce because we've got a lot of resistance that happened over here. Okay, this doesn't necessarily mean it's going the other way for a long time. It just means that it did for a little bit of time. Yeah, that's really what that means. So this could come up, could come down. I'm going to draw a couple more lines on here and try to get a little bit better idea of what I think. There's really 2 main things that I like to look at when I do manual analysis, and I like to keep this simple. Okay, you guys can see me draw trend lines. Okay, there's one right there. It looks like we tried to break out and we were not able to close, you know, a fresh candle above here. Okay, it's just been falling. So I think this is a continued downtrend. Here's our line on the bottom. And I always like to draw these left to right because that's the way that time works on the chart. Okay, so now what I'm looking at, really this falling wedge that's been happening, really kind of a flagpole that we're looking at on this thing for a long time. This is a really interesting formation we've got here. But really, you know, even if you just wanted to follow along with this like it's some sort of a Gann vibration, because that's really kind of what I like to look at myself. It's a little bit more of a niche term for it. Gann basically is just another Fibonacci Elliott wave guy, and you call it something else type of deal. That's really what it is. All those are kind of the same thing, just measured a different way. And if you guys aren't familiar with that, then keep coming to these sessions and you'll learn more about it. But this is a pretty standard Gann pattern right here. So we've got this little hump here, a slightly bigger hump here, and the finish that you would expect in this scenario is something like that. Okay, so that's really what I would expect, you know, on this CAD yen for the next few years. And I've, you know, been wrong before. You know, if we break out above this trend line, all bets are off. I'm betting that this comes up. But they've been trying to devalue the yen for my entire life, and let's just say they haven't done a great job of doing it. Okay, so all that stuff being said, I'm still bearish on this one. Still bearish. So if we come down to the weekly, work our way down, just like we're whittling a piece of wood. I'm going to go from the outside to the inside. Okay, we've got bearish looking moves here. Okay, so we'll get rid of this top line. We've already kind of decided we bounced off of that. this is making lower lows and lower highs. If we look at this here, I'll go ahead and lock this up. Here's a high, here's a lower one, and here's a lower one, and here's a low, here's a lower one, and here's a lower one that's actually lower than this one over here too. So I'm bearish. I'm bearish. Doesn't mean it's going to fall right now at this exact moment in time, but we'll get a closer look and we'll see if it makes sense to trade this thing. I'm already in it. As I showed you guys, I think I'm a little bit in the mud on this one. It's coming up right now. Yeah, I'm down 28 pips, $2.50 in this beat the market account. So I know lots to cry about with this $3 down. I may reload on it though. That's really what that means to me. Okay, so I'm gonna go ahead and delete all this stuff here because I don't need it. Okay, I already decided I'm bearish. Okay, so now all I need to do is figure out where do I want to get in. Let's go ahead and figure out, okay, where our fib levels are. I think we may have missed the top here. Let me make sure I get that. Yes, we did get that. And we're in a range right now. We're looking at a blue level that we turned around at, made a C. So I would be looking for a corresponding blue level below. Okay, and that's right up here. That's where I would want to aim. That's where I want to get out of the way and try to take some profit. You know, reality is I may try to take some profit sooner than that. Okay, you don't have to necessarily wait. You know, if I open 6 trades today and I'm winning all of them on Monday and I'm up 200 pips, I might just close them all out and call it a week. Okay, and you're welcome to do the same thing. You can't go broke taking a profit. And, you know, end of the day, you know, if you're up in 10 out of 10 trades, it's not going to be a terrible idea for you to get paid. And the market's been somewhat choppy here lately, if you guys can see the range activity that's been going on here. So, that said, easiest line to mark on the chart, this is very important, is the current market price. You need this for perspective. Okay, you need to understand where the market is versus where you're aiming. And then you need to be able to see also, where is my risk? How much of it is there and can I afford it? Okay, so if I go outside of my most recent AB boundary, which is basically where I want to go, because if we break the A, I don't know if you guys have heard this, if you don't break your A, you are still in play. That's really what that is. That's a saying that's been going around for years. I didn't make that up. I heard it from some other, older, more seasoned guy. But that being said, I follow that same rule. And actually, this does look like we came up to our green level. So I may be a little bit more conservative and aim at green down here. Okay, so what we're looking at here, and I'm already in this one too. I'm down 28 pips, like I said. So this is a better chance to get in than I got in at. There's a 320 pip opportunity on the bottom, 152 on the top. Canada is very heavily tied to oil. Okay, so real quick, I'm already in this one, so I'm not going to enter this one. But I'll go ahead and take a quick look at oil. Okay, just so you guys can get a feel for what's going on with oil. And if you guys can see this here, and actually I'll get these side by side so you guys can see both at once. Let's close out a couple of these windows. Okay, I don't care. I don't care about that one either. Okay, and we've got oil and we've got the CAD yen here. Let's get these both on the same time frame so everybody can see what's been going on. And let's go to the day chart. All right, so if you guys can see that move there, that looks pretty similar to what happened with oil recently, right? Downstrokes, okay, looks very similar. So if oil is going to come down, CAD might come down with it. This isn't always going to be that clear cut. A lot of things can happen. There's a lot of places to. The chief actually I saw the other day. He was in the product pitch meeting on Wednesday. He seems like he's doing better. He seems like he's also taking it pretty easy right now. But he's working again. If anybody is wondering what's going on with the FX chief, I know everybody's been worried about Jared, and he's gonna be okay. He's a tough guy. We'll just leave it at that. But that said, oil can come up without it being beneficial for Canada for a few different reasons. Okay, so this gets kind of convoluted, but I just want to kind of give you guys an idea. Oil does look like it is going to make a rise. Okay, because this is an uptrend on oil, and if we just draw a quick couple of trend lines on here, trend line breaks that have happened over the course of the last year or so. Okay, this is what I'm talking about. Okay, that's what's going on. Okay, so we may be breaking out up on oil right now. It really kind of depends on why oil is going up. And it doesn't make sense, in my opinion, for oil. Oil has really been increasing because more people are working. Economies are, more open in some places, way more locked down in others. We've got election season coming up here, and something tells me that they're probably going to want to try to lock us down again. Well, it seems like they are. They're also looking to, well, in the last day here in the U.S., they came out and went ahead and said that there was going to be a vaccine mandate for private businesses in the U.S. You guys haven't seen this, okay? Doesn't matter what you believe about it, good or bad, it's going to kill jobs. People are going to quit. People are going to quit. Any company with more than 100 employees in the U.S. is now going to be forced to vaccinate their employees or turn in a test every week. And I'm not sure if the test is really going to be included in the final documentation. I haven't read the final stuff. This just came out last night. But basically what this means is that a lot of private businesses are going to get kneecapped by the federal government doing this. Okay, so that is not good news for oil. It's not good news for the world economy, the U.S. economy, really anybody, unless you are deathly afraid of the virus, in which case it's great news for you. So, I mean, that's, is what it is. We're not here to talk about that. We're just here to talk about the impact on the economy. So, that said, I'm bearish on the dollar. I'm bearish on the economy here. I hate being bearish. I always used to talk crap about the guys that were bearish all the time. But, that is pretty much where I am. The money's going to go somewhere, though. Okay, so if you're bearish on something, you're bullish on something else. Okay, that's really the part you need to understand. If everybody's freaking out about the world, the economy's bearish, they're not going to close out their positions in the stock market and, just make the money disappear. It's going to go somewhere else. Okay, so I've already talked about this CADJPY. You guys can see where I got in. I'm not quite ready to reload on this yet. I do think it's a decent time to get in. I'm already in. I thought it was a decent time to get in at lower prices. Okay, you guys can see where I got in, this little red arrow. I like to make jokes, never wrong, just early. But, that said, I feel pretty confident about this particular opportunity here. I'm ready to move on. I hope you guys are too. I think that's really what we're looking at. We've got this trend line break here. I'm very confident that that's going to do what we expect, especially given that we've done an incredible amount of research just in the last 30 minutes. Okay, I pretty much showed you guys what's going on with the entire world economy since we started, and we've already found 2 trades. Okay, now we're going to go look at another one. Okay, here's one that I think is probably going to be more fun than most. Silver. Okay, let's go ahead and pull up silver here. And I think this one is hot cakes. Hot cakes. Okay, and this is silver for the last, 30 years, back to 1990. Okay, so we've got pretty much all-time silver. Silver's become much more popular as, everyone started putting an iPhone in their pocket. And that's a big reason why this price increase here was so hard for the government to maintain and for them to push down. Because that's really what they're doing. The producers in the world are pushing this type of stuff down. Okay, so, and they're doing that so they can maintain lower costs. If you're a company like Tesla and you want to sell cars, if silver goes to $200 an ounce, that's a big problem for you. Okay, so Tesla's not the only company that uses silver. A third of all of the silver that gets produced, mined, whatever you want to call it, is used for electronics. Okay, and if you guys haven't noticed, the average retail trader is long on silver. And the other thing, I feel like I've shown a ton of information in here today just because I've been gone for a couple weeks, but I want to make sure everybody's up to snuff on what's going on. Let's go look at the commitments of traders. Okay, and this report down here that I'm going to pull up here is going to show me what the hedge funds are doing. I want to know what the hedge funds think about metal right now. So if we scroll down here, we got palladium, platinum, silver. Here we go. What I want to look is the managed money. And if you guys notice, this information on this page is very difficult to take in. I think that they do that on purpose. But, that being said, I'm going to take a very, logical approach to this. More hedge funds are long than are short. Period. The hedge funds are long. Just went ahead and uncovered that. Okay, the producer merchants, the Teslas, those types of people, those people are short because they don't want silver to be expensive. Okay, so that's what that is. That's who's fighting all the time. It's the people that are, using that commodity in the marketplace, forcing the price down by shorting it with short interest in the futures market. Okay, that's what this is measuring. Okay, and this over here is the hedge funds, the big money, that allegedly knows more about investing than anybody here. They're long. So I'm going to be looking long. It's really that straightforward. I've already kind of come up with a lot of reasons why the dollar is likely to take a bath here at the end of this month, because if we raise the debt ceiling, there's now more dollars. Silver is still growing at the same pace. So I'm going to keep that in mind. I'm going to draw some lines on here so I can have an idea of really what the floor I think is on here. And I'm going to keep this real simple too. Obviously, we know the price has already been double what it is right now. That's the obvious part. This price has already been double what it is right now. And the demand for silver, just to say, I'll ask you guys think the demand for silver is up or down in the last 10 years? Up or down? Demand for silver. You guys think the demand for silver is up or down for the last 10 years? Yeah, you better believe it's up. That movie was super cute. Up. Felt bad for the old guy and his dog. But yes, up. Like, absolutely up. There's absolutely far more demand than there ever has been for electronics. Period. I don't know how else to put it. But let's go ahead and put this box. We lived in this box for years. Okay? Here's this box. So we lived here for a long time. It's been really hard to get back in this box. And I'll clean this up a little bit, make sure we're actually at the top of it. Because here's our high. And it looks like we already hot stoved it 3 times, if you guys can see this here. When I say hot stoved, what I mean is that the market came here and touched it and then made a massive up move for $10. Did it again just here a month ago. So let's come down here and look at the weekly time frame. Okay, so now that we're on the weekly time frame, oh, this looks like it's making a nice little low for us. I hope you guys are seeing this here, people. Okay, so we've got this green range I drew down here below. And, well, I guess it hot stoved on here 3 times. One of these moves was 10. The first move here was $10. Or, excuse me, the first move here was really only about $5, $6, okay, because we ended up at this high. And then it hit it again. This was a $10 move to there. Okay, so what I may expect is another $10 move from the bottom here. We've already moved $3 it looks like. So let's go ahead and draw another rectangle. We're going to make this one a slightly different color. You know, we'll make this one, you know, gray. We'll draw this box. Here's another box. Okay, keep this nice and basic. Okay. Yasmin, the audio is in English. There will be closed captioning on YouTube when the recording comes out in Spanish. So you should be able to watch with subtitles in Spanish once we go ahead and post the recording here later this afternoon. It should be around 3 p.m. But let's go ahead and take a closer look here, okay, at what's going on the lower time frame. Let's hit the daily. Just working our way down. I haven't done anything complicated yet. I drew a couple boxes here. And, you know, right now, we are making, if you guys can see here, from the bottom of our box, this is the high, and here is a higher one. Oh, let's go ahead and lock this tool. Here's a higher one right here. Here's a low, and here's a lower one right here. And hey, we might actually be forming another low right now. Okay, so let's come to our 4-hour time frame. And what we're looking at here, okay, is, well, very much the same thing. I just want to get a Fibonacci on here. Let's pull this right from our bottom wick, see what our range is. Wow, it looks like we broke out of this range on our 4-hour time frame. We're testing it right now, which to me feels like a great buying opportunity. If you're a breakout trader, that is, and a lot of people are, because this trend that's been on this rise has been going, well, really, all the way back here. It started on August 8th. So this thing has been primarily up for, oh no, it's actually further back than that. Yeah, primarily up for the last, I don't know, couple of days. So if it continues doing what it did for the last couple of days, maybe for the next few days, then I may be able to chase it to this extension level above here. I'll zoom back in here so you guys can see. I'll make this green. This is the line that I will rip the tape on life and decide that I don't want to be in this trade for right now, even though I do think it's going to come much higher. Okay, but I'm going to try to narrow down my expectations to something that is, well, very likely to, what I want is likely to happen. I get to take profit sometime soon, really what I want to do. And I also don't want to have a massive risk. Okay, so there's the current market price. And now I need to figure out where I put my stop loss. And I can pick a few previous lows. There's 3 of them right there. Okay, so if you want to be aggressive on silver right now, that's really it. Okay, so I'd be risking this, you know, 50-cent gap here to try to capture this dollar above, better than a 2-to-1. So, that being said, I think a great opportunity. Lots of reasons to believe we can get up to this $25 price. Well, let's just say we've spent a lot of time there, and if you guys haven't been paying attention, the demand for silver is up, and we're about to increase the supply of dollars more than likely by, I don't know, 3, 5, 6, 7%. Who knows? They might add $5 trillion to it so they can afford their next big expenditure on the infrastructure that we don't have the money for, because that's the only way that they will have the money is if they raise the debt ceiling. But George, if you're late, you are definitely going to want to check out the beginning of this video once we post it on YouTube, because we have covered a lot of information in here today. I think I might have overloaded people with economic news here today. If you guys ever feel that way, I mean, tell me to slow down. Because what I want to do is I want to share as much as I can. I feel a moral obligation to tell you guys everything that I see coming. And I'm not a wizard. I don't get to move the market. I'm not a central banker, but I do like to think that I've done a good job of trying to think like a bank over the course of my trading career. So that's what I want to help you guys learn how to do and more about. It gives you, if nothing else, if you don't want to learn it as much, I want to at least help you see what a lot of really seasoned people look at. So that being said, this is what I'm looking at for silver. I'm going to take a picture of this here, and we're going to move on. I actually can't trade this here in the US the way that you guys can everywhere else, because they don't like to let us have a whole lot of fun here. I would love to be able to trade silver the way that you guys can. Gold is going to be real similar, I think, just so we're on the same page with that. I know a lot of people want to see gold. So let's go ahead and check out XAU USD. And this is going to be real similar. I'll go ahead and just pull up the all-time frame so you guys can see this. I'm going to do this real quick. Okay, so if we look at the range that we were in at our previous all-time highs, I'll just draw another box here. Okay, this is really kind of, there was a range that, we broke out of. Here's our new all-time high that's up here. You guys can see that. Just trying to get a little perspective on this. Okay, gold is a little bit more overpriced in my opinion than silver, but that being said, I don't know if you guys can see this pin bar right here, this candle right here. That is a big move. The market fell, let's just say the high, okay, this candle opened on August 1st and the high was 1,831, okay, the low 1,688, the total range was $1,400 in this month. Okay, so what that tells me is that the market fell $1,400 pretty much, and then immediately went back up. It hot stoved. Okay, so for whatever reason, okay, maybe we come down here and we look at this level and we see what's going on. Okay, that's been our more recent hot stove, and what I mean by that is that we hit this range, and I'm just looking for patterns. I'm trying to keep this simple for myself. Just looking for patterns. That was a hot stove right there and there. Okay, 3 times, just like silver. Okay, so maybe it's going to fall back into this other range. It could. There's absolutely no gospel in the world. None. But, the reality is we just talked about all the reasons why there is a ton of risk in the dollar, because they're going to increase the supply of them by, say, 3 trillion. That's a 10% increase in the money supply. So a 10% move on something like gold, you're talking a minimum of a few $100s. Okay, and it's more than likely going to be more than that because, well, let's just say if they raise the debt ceiling now because we can't afford our debt, and we take on more debt to do it, and we don't increase tax revenue because we're shutting the economy down, it's a recipe for disaster. Okay, so the NFP that happened last week also, the non-farm payroll, David, thanks for bringing that up. They were off by 500,000 jobs last week. Okay, just to show you guys, we'll go back to last week, because I wasn't here for this. Hopefully a lot of you guys got to see that session with Chris, but they were expecting 720,000 jobs. And we just saw, 235,000. And then they came out and talked about how awesome they were right after it. Okay, I don't think anybody realizes our unemployment rate was lower than it is right now, and really in 50 years. Back here, February, you guys see that? Okay, 3.2%, something like that. February, that's the best in 50 years if you go back. 50, you can't find a lower number than we had in February of 2020. Okay, so we're at double that, well, maybe not double, call it like 1.8% of that, something like that. And they're, raising their fists in triumph right now in DC. You gotta love them. But let's keep on moving here. Doesn't matter. Come down here to the week. And this is, we're still looking at gold here. So what I need is just to figure out where I can manage my risk. If I want to look for a buy, we're at a relative low right now. So let's get on our daily. And, you know, this does look like we've got a higher high on the right than we did on the left. So I am bullish. I might actually even just pull up a range here so you guys can see what I mean. Okay, so we did come down here. We hit like our 114 level is what that would be. So maybe I would expect to come up here and test a high. That's something way up here. Okay, that might be something that I would look for, because there's other turnarounds at that price. I'll actually change this to green. This is the rip the tape on lifeline for me. I think that's where gold is headed. Doesn't mean that's where I'm going to trade to, but that's where I believe it is headed. As far as it goes, I'm just going to whittle my way down on this like I have on the rest of these. Okay, I'm just going to work my way down. Okay, that's the current market price. It's the easiest one to mark, so I do it on every single chart. I recommend you do the same. Just mark that line and you'll know where the market is versus where your risk is. For example, if I want to put my risk line right there below 1760, okay, so if I think 1760, maybe if I think I come down here a little bit lower, 1746 is a good price for me to not worry about getting hit because I want to take it all the way to 1933, that might be where I do that. Okay, those of you that are shorter term thinkers, not looking to take that quite as much risk, maybe you don't have enough money to trade that way, then you may come down to a lower time frame like I did on silver, okay, and we may just look for a range we can trade in here, and we're going to just tighten up our lines. I've got a bunch of lows right here, so I can tighten up there, tighten up on the top, reel myself in, use this fib level that I've got that just happens to be a nice price pocket over here. And when I say price pocket, I'm talking about this M formation that happened right over here on the left. I'll go ahead and draw this for you guys. This is the M that I'm talking about right here. You guys can see that. Okay, so I'm just going to aim at the point in the middle of the M right here. That's what I'm going to aim at right there. Okay, so I'm going to try to get out a little bit before that. Also happens to be a heavy fib level on this larger term perspective that I'm looking at here that goes back all the way to March. Okay, we did make a higher high, so in my opinion, we're in an uptrend. Okay, this is also trying to form somewhat of a head and shoulders formation down here, if you guys can see that as well on the bottom. So when I say head and shoulders, this is what I'm talking about. This right here, okay? You guys see that? Okay, so this might be when we break the neck on this, that's really when you confirm the up move. The neck is this line. Okay, the neckline, I'll get rid of this. You guys don't need to see that anymore. I'll get rid of this M2. It's getting loud. But the neckline is really just where these two highs are the same right here. Okay? This one on the right is just a little bit higher than the one on the left, I think. Just a shade. So this is very much a standard head and shoulders, in my opinion. Okay, as soon as we break that line, some traders may treat this like a breakout and take a slightly different approach on this. That's up to you how you want to do it. If you want to wait longer to try to get in and trade the breakout, then you can do that. Or you can manage your risk really however you want, as long as you manage your risk. That's totally up to you. Yeah, David, I mean, as far as when announcements come out, that's usually when, well, that's usually, you know, it's buy the rumor, sell the news is really what it is. So right now, I'm expecting weakness on the dollar until the end of this month. When they raise the debt ceiling, the dollar might go up. Is really what I'm saying with that. At the end of this month, leading up to it, it could very well fall the entire time until they raise it, because the market's pricing it in. So, you know, it's one of those things that if I know something's going on, the whoever you want to think the evil people in the world are that bet against all the regular people are, then those people know, bottom line. And one of the things that you guys may want to check out if you aren't familiar with repo markets. Okay, I saw a video, actually I'll share this. You guys should probably all see this. There's a guy named Mike Maloney. He sells hard silver and gold, whatever. So take it with a grain of salt. This guy is trying to get people to buy gold and silver. I mean, it is what it is. But let's go and check this out. He's got a chart. It's on the Fred's website. I'm not sure exactly where it is. But this video here, I want to say, I'll pull through the video. I think it's somewhere further in here. You get past this advertisement that's here. But we're going to just scroll up to his Fred chart that he's got here, because he's got I think an interesting perspective in this video on repo markets, and he shows more or less how they ramped up the repo market before the crash in 2008 and more or less what they've done more recently. You know, we can just look at the chart that he's doing. Monetary base and reserve balances, that's not it, what we're looking for. I want the repo market. This is it, I think, this part of the video. Regardless, I'll just send you guys this link. You guys can check it out yourself. I don't know if I'm going to have time to search for that in here right now. But I do think something you guys, it's very interesting because they ramped up the repo market in September of 2019 in one of the strongest economies we've ever had in the United States. And they basically did the same thing in 2008 when there was an impending crash. So that being said, very concerning that they knew about the coronavirus crash, 3-4 months before it actually happened, and they prepared for it at the Federal Reserve. But that's what this video is about. So if you want to check it out, not a conspiracy theory, the guy's just going to show you a chart. So that being said, let's keep on moving here. Let's get back into some currency pairs. Okay, so gold, I am long, I'm bullish. Looking for 1855, I think is probably a decent target, 1860. Okay, on the low side, I don't really think that we're going to get lower than the 1770 range. So that's really what I'm looking at with that. I would strongly recommend, if you've never traded gold, to trade it with a demo account first before you trade it live, because it is going to have more risk than let's just say you don't get as much leverage as you do in FX pairs. Let's go ahead and look at the Euro USD. This one I think is at a great spot. I'm long in this one right now too. So let's go ahead and click the all time frame here. Europe is really trying to fight the US on forcing up the euro. But it's been a battle. It's a race to the bottom for them right now. It has been for, I don't know, since the euro was invented, they've been racing to the bottom. At least that seems to be, maybe that's not true. Maybe just back since 2008. They've been trying to keep their currency cheap. Okay, that's really, if you guys can see that here, it's been very choppy. Okay, so let's get down to actually, let's get some of this stuff out of the way. Because I'm already in this trade. Just want to get these lines out of the way so you guys don't have to see this stuff. Save. All right, so here's what I'm looking at on silver, or excuse me, on the euro. Okay, so I'm going to crunch this thing down. I want the whole world in my hands. I want to be able to make a decision on what this pattern might be with all of the information very easy for me to see. I want this to be small. 10,000 foot perspective. We can analyze the oil chart when we get there if you want, Marta. I think oil is going to be somewhat erratic. I really do think it's going to be bearish, but hard to say. Oil's kind of a stay out for me right now, but we can take a quick, I know I pulled it up earlier. We can take a quick look at that before we get out of here. But this is the euro. Okay, so what we're looking at on the euro, this is real clear cut. Okay, this is what I'm looking at here. Okay, this is what I'm looking at over here. Okay, real clear cut. Okay, not really a, if you guys are blown away by this pattern, well, you should zoom out on your chart more because it's easier to find stuff like this. Okay, I've probably drawn this same thing 100 times in the last, 5 years, and you'll get to a point where you can kind of do the same thing on whatever you want to look at because you've drawn them before. Okay, that's really what it is. I've drawn all these lines before. Now, okay, I'm bullish because we're on the right side of our trend line. When I say right, I mean the physically right side of the trend line. A la derecha. Okay, so we made a new high on the right side of this trend line already. So that means that I'm going to be bullish long term. This is the monthly time frame, so it doesn't mean like I'm going to be bullish today necessarily. Granted, I am, but I'm just trying to give you guys an example. Okay, so these are higher lows that happen on the right side of our trend line. So this thing, yes, could very well come down and test our hot stove again. Okay, just to show you guys what I mean by our hot stove, I've shown this on a couple of other things. Okay, so it's really a demand zone here. There's our hot stove. Okay, and we already hit it. I'll delete these other circles so you can see where it bounced off of it. One of them is actually that hot stove level. Okay, so I'll go ahead and delete those. But this is what I'm talking about. These. Okay, right here. That was a big move that happened. There's another one. Okay, those are hundreds of pips that happened on this last one. This last time that it hit that level, the market went ahead and climbed for 670, or it says 699 pips is what that says. Okay, this is the last time that it hit the price it hit, last month. Okay, so it took 2 months for it to get there. That's a 600 pip move. Most of you would be stoked to capture, 600 pips in your lifetime if you're brand new. Because I know when you're new, it feels like, oh my gosh, as soon as I open, it goes against me. I know everybody feels like that when they start trading because that's the way that I felt when I learned. That's, really what happens. So let's come down to the weekly time frame. Okay, so weekly time frame, what we're looking for here, I'm bullish. We already decided we're bullish. We're on the right side of this trend line. Okay, so what I want to do, just figure out what's going on with this intermediate trend. Wouldn't you know it, we've got a counter trend line break. Our downtrend was broken, and we're coming down for our 1, 2, 3 opportunity, which means to me, it could very likely do something like that. Okay, so I don't necessarily need to take this thing, to infinity and beyond. I just need to take it where I think it's likely to go. Okay, so that being said, let's get rid of this little squiggle we made here. Let's come down to our daily time frame. I'm looking for buys. I feel really good about this buy. Here's our day. Okay, so now we're on the day chart. We're looking at, a couple months worth of data now. And I want to figure out where this is in the waves. So let's go ahead and hit our ABCD tool. We hit the 382, so it would be an early turnaround on this daily time frame, but we are at a very heavy level of support. There's a big price pocket. Here's a W. I'll pull up our W. Now, if you guys can see this here, here's a W. Okay, I showed you guys an M before. There's our W. Okay, and the point where that W, the pocket that you guys saw me trading to before, right there. Okay, I'll go ahead and draw a ray from it also so you guys know what I'm talking about. Okay, this price, okay, where this thing turned around, that's where I'm going to trade away from. Okay, so that being said, I'm combining a lot of strategies in here, but really that's what I'm looking for. Okay, I'm looking for places where the market has turned in the past. Past resistance becomes future support. Past support becomes future resistance. I don't get to choose where the market turns around, the market does. I just want to get in at those prices. That's really all that I'm doing. It is really that straightforward also. So that being said, let's come down to a slightly lower time frame. We've already decided we're looking for buys. We need to find something that makes sense for us. If we come down to our 4-hour time frame, we're looking at a wave 3 type of situation. So, maybe I could zoom in here. It looks like we got close to our green level below, which is where we, tested this W formation that I drew. Okay, so now that we've tested that level, okay, if I draw another little inner trend line here, got this guy here. Okay, so I feel really good about this. I really think it's a great time to buy. So what I'm going to do, figure out where I want to get out. Maybe we aim at our green level above. That's just right here. Okay, because we got real close to our green level down here. Maybe it goes to blue. Maybe it stops at green. Who knows? Doesn't matter. Only matters if we can manage our risk. There's the bottom of that AB boundary. Here's our current market price right here in blue. Oh, hold on. I'll get our stop loss in red here. Change this to red. And we're outside of the AB boundary. That's really what I'm thinking for the euro. It could fall more. I really don't expect that to happen, but it could. They could work really hard in Switzerland. Okay, we need to look at the Swiss franc before we get out of here. If nothing else, I'm going to show the Swiss franc. I know everybody wants to see. I'm already in this Euro USD trade also, just so you guys are aware of that also. I'm already in this long. I bought it. I'm up 10 pips. Okay, so as far as the pound USD, I'm also long in that. I'm up 31 pips. The pound has been a little bit stronger. Let's go ahead and look at the USD CHF. Okay, so there's two main currencies that people like to put their money in when it hits the fan. Okay? When everything hits the fan and people are worried about stuff, when in doubt, people have a tendency to invest in the Swiss franc and the Japanese yen. We've already looked at an opportunity on the Japanese yen. If I come to the all-time frame on this Swiss franc, you guys think uptrend or downtrend? Up or down? What do you guys think? This is the last 27 years. So if you're a bank and you're going to invest in, 30-year bonds, you thinking up or down? You're a bank and you're thinking 10-year bonds. You think up or down? Oh, we're at a low price. It's sideways. That was kind of a trick question. That's a great answer, Philip. Way to stay on it. But the truth is it's been sideways. Okay, and if you want to look at a couple straightforward patterns on here, and the trend is down until it's not. Okay, that's the part that people don't understand, that people have the most difficulty understanding. The trend is down until it's not. And just from a standpoint of lower highs, lower lows, a lot of people like to draw a trend line and see that the trend line broke, so it must be an uptrend now. That's not always the case. Okay, it's all about higher highs, higher lows, lower highs, lower lows. That's how you figure out if it's an uptrend or a downtrend. Here's the highs. Okay, I'm just drawing all these lower highs that have happened. You guys see all these lower highs? Here's more of them here. Okay, here's more of them. Here's another lower one. Okay, so we're still downtrend. Okay, and if you want to talk about trend lines now, we can do that too. And here's one that happened a long time ago. We broke that and fell, you know, thousands of pips. Okay, and there's smaller ones too. You can draw those too. I mean, there's a lot of them. So I mean, there's a lot of them. That's the bottom line. And when they break, now this thing's been going sideways for the last few years, but we've got this line right here. If you guys can see that, that's a pretty big one. We haven't seen one that big in, I don't know, really, we haven't seen a break on a line that big since all the way back here in 2000, well, early 2000s, when the U.S. decided to start fighting their war on terror, the invisible enemy that we fought for the last 20 years, and then just, you know, kind of, you know, surrendered $80 billion worth of supplies all of a sudden. So my opinion is that we're still bearish. That's really it. And I don't have a reason to believe that we're not. Also, considering that they're going to increase the supply of the dollar in 3 weeks or less, I feel pretty good about trying to sell it right now. So let's come down to the lower time frame. Let's check out the week. And this is a little bit, this trend line that I drew here is a little more clear cut here. You guys can see that. Okay, so this flash crash that happened in 2014 was pretty incredible. You know, 1,400 pips in a night. You know, that was they didn't tell anybody that they were going to do that. That's what happened when they unpegged from the euro, and then they kind of secretly pegged to the euro after that because they decided it was a bad idea and they wanted to prop up the value again. So that being said, I digress. Let's keep on moving. Okay, so we are in a somewhat sideways territory down here on this specific look. Okay, so if we come down, we zoom in, see what our trend line's doing. Okay, we're below it. Okay, so if we're below the trend line, that means that I'm still looking for bearish movement. That's what that means. Okay, so what I'm going to do, since we are looking for bearish movement because I'm below my trend line, okay, if I was above it and I'd already created a high up here, so let's just say if I was above it, I'd be looking for buys. And that's just really that straightforward in my brain. You know, I'm going to go ahead and draw that. You know, I'd be looking for buys if it does something like this. Okay, so if it comes up and we create a low right here, I'm looking for buys all day, every day, for how many years, I don't know. But end of the day, it hasn't done that. Okay, we're just making lower highs. So the trend is the trend until it's not. Really just the most straightforward way of looking at it. The trend is the trend until it's not. Okay, I'm a trend trader like the rest of everybody else. And I think that there's only 3 trends. There's up, down, and sideways. That's why you guys see me draw a lot of lines and boxes. Because, well, let's just say it's a very easy tool for me to use. Okay, so if we look at this here, we hit our 618 almost on the nose. You guys see that? Almost on the nose. We hit our 618 right there. Okay, so that was our retracement. That's our C level that already happened. Okay, so if we come down here and we look at the extension level below at 80, that's 1,000 pips away. You guys see that? From current market price. That's 1,000 pips below. And we've been at that price before. You know, it wouldn't be that crazy. We had a pretty big crisis in 2008, whatever. That kind of played out for a few years. And the market felt like a rock, you know? Felt like a rock for a long time. So I really think that we can get back down there. It's 1,000 pips. I figured I'd show this one to you guys later in the presentation because it's awesome. I didn't want you guys all to be like, all right, well, I'm going to load into this one and see you later. But generally, I don't think that's a good idea. Diversification is key. Let's come to a lower time frame. I want to find an appropriate place for me to put my stop loss, maybe whittle this down to a slightly smaller trade in the short term because I don't need to try to get 1,000 pips on one trade. You know, it'd be really cool to do that, you know, but I don't want to wait years to get there. Okay, that's really what that comes down to. I don't want to wait years. Okay, really, I just need to manage my risk for a relatively short period of time. Let's get a new ABCD on here. And that didn't do what I wanted. Let's go back up to the week. So if you have it, if it doesn't really hit the whole wave for you, that's usually what I'm going to do with it is just come up to the week. And, well, reality in this particular situation, I've got really low prices I want to aim at. So let's just kind of get a line here for some reference for ourselves where I might be able to aim to, just to be conservative. We'll say the edge of my AB boundary. So if I want a decent risk reward, yeah, sorry about that, David. I'm not sure. Well, let's just say hopefully the video doesn't lag. We'll just put it that way. I don't really know. It shouldn't be. I've got 500 megabyte per second internet service or something here, so it really shouldn't be a case on this side. But that doesn't mean that. Let's just say I hate Spectrum internet, so it wouldn't surprise me if they slowed down for a couple minutes here. Keep going, could easily be on your side. Yeah, exactly. So I'm going to come down to this. I just need to figure out where I want to put my risk. Okay, where haven't we been in a few weeks? This is a weekly chart that we're on. So we come to the daily. Okay, we haven't really been above, this price here. We haven't been above that price since all the way back here in April. Okay, that was the last time we were above that price. So maybe if I aim just a little bit higher than that. Okay, so now you guys can see this kind of reeling in a little bit. If the market does climb against me now, I could probably sell it again if I wanted to. That's a 200 pip stop loss, so this is wide. Yeah, this is a bigger opportunity that we're looking at. So if I want to aim towards maybe just testing this low down here, which is much more likely than me aiming, all the way to Kingdom Come, okay, that might be where I want to aim. Okay, and for a few different reasons. The market's already turned around there 3 times, pretty much. And actually prior to that, we had this price pocket, another little W here. Okay, and there's an M on the top. Generally, I think this is just a very likely range. So if you were looking, I'm not in this one. So if you want to know how to open a trade like this, okay, first thing you need to understand is how to measure. Okay, right now, from the top of my risk here, I'm looking at 135 pips that I'm willing to risk. Okay, and this is 241 pips on the bottom. Okay, so make sure it's 130, 240. I could probably aim further and make sure I got the right lot size here. If I do a 0.01 here, okay, 0.01, do this in this live account here. I'm going to add my 130 pips for my risk, my limit. I'm going to go ahead and click this little bubble, make it 240. And I'm going to go ahead and click on the sell button. Okie dokie. We are in. Okay, so I'm going to go ahead and pull up oil, and then I think we're just about out of time here. And oil, I know that we had talked about this a lot. Oil is a relatively difficult thing to figure out right now for a lot of reasons. A lot of people may not realize that Saudi Arabia is working on a way to stop buying oil with dollars, or stop selling oil, with dollars. So if that happens, that's a big, it's just a big change, because this chart we're looking at is oil versus USD. Okay, so if they change the way that people buy oil, this chart's going to have, let's just say, it could get very confusing. So that's one of the big reasons why I'm somewhat, afraid of oil right now. That being said, this is what I'm looking at. We have a broken trend line. We have a high that formed on the right side. We've got a hot stove I showed you guys on the other commodities. This is a commodity just like anything else. Okay, so oil, okay, may be kind of bullish. Okay, just because they're going to lower the value of the dollar, which currently, the majority of oil, if not all of it, for the most part, is purchased in dollars. Okay, so if dollars are going to go down by, let's just say if they add $3 trillion to the debt ceiling and make it 33 trillion instead of 30 trillion, that's a 10% move that should happen on oil. Okay, and 10%, you're talking at least getting to the highs that we've already been at. And I don't know if you guys see all these crazy higher prices over here. Okay, all these prices existed during the Obama-Biden administration. So for us to get into this, Obama-Biden oil range up here, wouldn't be crazy surprising to me. Anybody else think that would be surprising? The person that's leading the free world right now, or I guess if that's what you want to call it, in the U.S., is pretty much back in power. A lot of people think Obama is making the decisions still. Maybe it's true, maybe it's not. It's hard to believe that somebody as slow upstairs as Joe is making all the decisions that are happening. You guys can disagree with me that on the president here in the United States if you want to, but the bottom line is the guy is not he's not sharp. The Democratic Party is talking about the 25th Amendment, which basically means they're trying to get rid of him and put Kamala Harris in charge and have Nancy Pelosi be the vice president. So if you guys don't understand, really what's going on with that, we don't really know who's running this country right now. Because frankly, Joe Biden doesn't answer any questions about anything. He always tells us how I've got to get going now. They told me I need to stop answering questions. Who are they and why do they tell you not to answer questions? That's what I want to know. But most people, just kind of say, oh, okay, you're just a nice guy eating ice cream. And, I'm just not going to sit through that. Okay. What I'm going to do is figure out what they're doing, why, and how I can make money off of it because I don't have any other choice. Okay. So let's come down to the day. Okay. So we're looking at this day. Okay. And this actually might be a pretty bullish signal. Now we're talking about this. I'm glad we got into oil more than we did before. We got a little counter trend line break. This thing's been super bullish for a while. Okay. So what I think is I'm looking for buys. Okay. For the same reason I am on gold and silver and every other commodity on earth. It is commodity season, baby. So if you didn't get the memo, here it is. They're going to increase the money supply or crash the economy. I don't think that they're going to crash the economy. I don't believe that. They could. I don't believe that they're going to do that. I mean, if there's anybody I wouldn't put it past, it's the idiots that we have in charge right now. But this trend line has not broken yet, actually, so we don't have confirmation of this yet. But generally, if you even just wanted to trade the consolidated period, we haven't been below this price here in days, really weeks, $66. You could actually aim lower than that. Here's our price up top, and that's within range. Within the range is right there. Here's our current market price right now, and this is just a range. This is just if you expect it to go sideways, which I don't think is going to be the case. Okay, I do not think that's going to be the case at all. We come down to the bottom here, and we see where we are with the waves. Go ahead and pull this from our daily. Okay. So the Goldman Sachs magic number up here is 80. We have not hit that yet. Goldman called this a long time ago using the same Fibonacci range that I just pulled for you guys just now. Goldman said 80, long time ago. We can probably search for the news article right now. Goldman Sachs. Oil. Let's just type in 80 because I know that they're going to find this news article immediately if I do that. Goldman sees oil hitting $80 a barrel. That was in May. Okay, so Goldman gets what Goldman wants. Seems like Goldman likes this daily chart Fibonacci that I drew too. This might actually be your target, in which case you could have a little bit more play on the bottom here if you wanted to. I think a stop loss below $65, $4.50 versus the upside of 10 is a fantastic trade. So I think oil's going to come up, even if demand goes down. I don't think demand's going to go down in the short run. I think this could happen in the next couple of weeks, really before this month is over. Okay, so yeah, David, it's sad to point stuff like that out. Let's just say we'll keep that joke between us. But that being said, okay, so let's talk about this. I'm bullish on this. I can't purchase this from my account here in the US. You guys can in yours. If you have not traded oil yet, okay, then please do me a favor, okay, and trade it in a demo account first so you can understand what the risk is like. There will be other massive opportunities in the world. I don't know if they're going to be like the ones we're looking at now. I don't know if it's going to be as clear cut. It's usually several months, years go by before you get a signal like the one we've got right now. Hitting the debt ceiling is a big deal. Okay, if it's literally just an increase in supply, and if there's, inflation itself is just there's too much money and not enough stuff to buy, so prices go up. That's really what that is. Okay, so yes, we could have some CAD strength here, Philip. Could absolutely have some CAD strength, and I think the NZDCAD, someone had actually asked me about, and I was very bullish on this, so I'm glad that somebody asked me about this earlier in the presentation. I think it was George. Well, let's go ahead and take a look at this here. Okay, I am long-term bullish on this NZDCAD. I'll show you guys why. Long-term. I'm not talking about short-term right now because I think there is a lot of risk right now with the potential housing bubble pop in China. That's a big deal for New Zealand. That is a big risk-off type of situation because if, let's just say the housing market in China collapses, they do a heck of a lot of importing from places like New Zealand and Australia. Okay, so yeah, exactly, Philip. It's commodity versus commodity. New Zealand is a very commodity-based economy. This is a likely sideways type of pair. Okay, so Canada's likely to benefit from oil going up by 10%. or whatever happens, if that happens, then New Zealand would be, because they're going to have to pay more money to import, export, do everything that they do. And, you know, obviously they're going to make more money on wool and whatever it is that they want to, milk and every other thing that they sell to China and Australia. Okay, so all those things said, this thing's been coming up for the last couple of months. Okay, I think sideways time for this. I don't think there's going to be a super huge defining, you know, downward move here, but I don't know. Nobody does, because a lot of things can happen. If you guys haven't heard any of this presentation, I've talked about a million different things going on in the world economy so far. Okay, all over the world. And that's just a big hobby of mine. I like to read news. I like to know what's going on. I like to have a reason why something might do something. That way I can look at 5 currency pairs to trade and be done. As opposed to, I don't like to do analysis. If you guys don't understand that, then I'm not sure what to tell you, but I just don't like to do analysis. This is work for me. Okay, so not that it's something that I feel like is difficult for me. It's just, this feels like work. Okay, I would much rather read a bunch of news articles than look at, you know, 200 charts. You know, I don't want to look at 200 charts to figure out 3 trades. I want to look at 5 charts. But, you know, everybody's different. Some people like to do the analysis. Some people like to do the research. You need to figure out where you fit in. There's plenty of people that don't do any research whatsoever, and they trade purely on technicals. There's a lot of them. Tons. So just keep that in mind. You don't have to be me. You just have to figure out who you are. That is what you're going to learn the most about with your trading, is you and how you can live with your decisions and take responsibility for what happens in your decision making. If you can't ever figure out how to take responsibility for the decisions you make, and you always blame it on the market going against you, it's the dang market's fault, then I'm sorry, you're never going to have a good trading career. You're going to have to learn how to take responsibility for the risk that you take, which is what I'm trying to teach you guys here. Okay, so this is the NZDCAD we're looking at. Okay, and this could come up a little bit. Maybe not. Who knows? It could go another 1,000 pips upward. Okay, right now with what we're looking at, potential $10 bump on the US oil price, that could be the move that we're looking at right here. This could be it. And, you know, let's reel in our expectations a little bit. Let's come down to our daily. I'm going to whittle down just like I have on everything else. Okay, and we come down to our daily, we're closer to the top of this range. Okay, so I'm not going to be as cavalier as I was on my weekly chart. Okay, so if you guys can see this here, we bounced off our green level above. We made a high yesterday. There's a bearish hammer at the top. This is a great opportunity, I think. I'm going to reel in. I'm going to aim at this green because that's what we hit above here. That's where our C price is. You guys see this here? This is a C price. Okay, right there. And I'm expecting my D price to be down here at my green line. Okay, that's what I'm looking for. D. So A, B, C, D. And I'll just draw this for you guys. I know everybody has a hard time seeing this stuff, especially when you get started. Some of you that have been doing this for a long time are like, Will, hurry up and get to the cool part. I get it. Okay, that's what I'm looking for. That is the A, B, C, D movement that I'm talking about. That's it. Okay, so let's go ahead and reel in our stop loss, because I don't need to be outside of my previous AB boundary. If my A is still, if I haven't broken my A, I am still in play. And what that means is that I've got a really amazing risk-reward ratio here. I don't even need to aim all the way there. And you know, this is commodity versus commodity. Commodities are going to be crazy, so let's aim in the range. Let's just stay right in the range. I don't even need to get out of it. Okay, let's aim right there. The market's turned around at that price a couple of different times. I've got plenty of risk-reward to do it. So let's go ahead and see. This is really what I'm talking about. Sorry, throat's getting dry. I've talked a lot. But yeah, those are previous turnarounds. Okay, there's lots of price pockets, M's, W's, whatever, all in this range down here. I think this is a great trade. So let's measure our risk above. This thing may take a couple of weeks, probably till the end of the month. And then I'll be out of Dodge. Before this whole debt ceiling thing happens at the end of the month, because you know they'll wait until the last day of the month to make sure that they get paid on the first day of the month. There'll be a lot of triumphant pictures of Nancy and Chuck just marching down the hallways to save the government and make sure that we don't shut down the government, because God forbid they miss a day of work. So that being said, Okay, this is exactly what I think is happening here. I'm going to go ahead and place this trade, looking for 220 pips on the bottom side and 100 pip risk on the top. So here's our 100. We'll say 220. We might just make this a straight 200, 100, 200. Yeah, Maurice, every country is bankrupt. All of them are. So that's the part that nobody understands, is that all of them are. They keep all of these currencies in a range, which is really just an opportunity. You got to stay positive in this scenario because they're manipulating the market. You just have to figure out why and when they're going to do things. Okay, that makes it a lot easier to figure out what to trade. And other than that, you just need to understand how to manage your risk. And that's really all we're doing here. I'm going to go ahead and make sure this is in the right place. I'm risking $10 on this trade to make 20. See you later. And we are out of time here, folks. So if you guys are looking for more information, those of you that are new, okay, so if you are looking, yeah, Maurice, I know it's hard to believe that I'm going to do that. But I am, let's just say, very, very bullish on commodities right now, and I think that this is destined to be sideways. If you guys haven't already, if you like these sessions, go to Google, type in 123Trade here, just 123Trade, and it'll find our business over here. Give us a review. I would absolutely love to get a review from you guys and know what you guys think about these trading sessions and your service that you get from 123Trade. And if, well, let's just say there's no other better way to tell us thank you for the free service we offer. I just put a link for the Google review thing in there. I would really appreciate that. That is the one thing that probably helps us more than anything else. And if, yeah, I think, David, you might have already. There's some other pretty good reviews in here. I mean, we wouldn't, let's just say we like to think we're pretty nice to people. At least I like to think so. This is really kind of a passion of mine, if you guys can't tell. I love doing these sessions. I appreciate everybody coming, staying to the end. I'm going to hopefully have this thing posted here by sometime around 3:30. It'll be the recording will be up on YouTube. But if anybody, has any questions about adding funds to their account and what you could potentially get for free, there's a lot of information on our website. You can also send an email to brokers@123trade.com. But again, I'm Will Bridges from your team at 123Trade. Happy Friday, folks. Have a great weekend. And you guys, be good or be good at it. Take care.